Hey guys, welcome back to Ryan Makes Sense, where we talk about personal finance, investing, and chart analysis. Today, we're actually going to be looking at two gaming and hospitality gambling stocks. That is going to be AGS and ticker symbol FLL. I'm not sure what's going on with these companies. I know they both have had a fall from grace, I believe, if I'm remembering them correctly. At least Full House Resorts has. I want to take a look at their financial data points with you. I want to look through their balance sheet. I want to look at the chart. I want to see if institutions are buying or selling to see if there's an opportunity there for a purchase or if they are overvalued and possibly going lower. So without further ado, let's go ahead and hit the subscribe button and jump on in. All right, the first stock we're going to look at is ticker symbol AGS. Let me get my head out of the way. Looking at the daily chart, it looks like it's had a nice rise from 6s to now 9. Let's look at the bigger picture first. So the stock was trading as high as 32, went as low as $47 and has climbed its way back to $9. The strength here looks actually pretty decent. The momentum actually looks a little exhausted in my opinion. It's been on an upward swing since back in 2021. Money flow is getting back to regular. It's actually at all-time high money flow. Momentum is obviously clear direction up. So we're looking good there. They are profitable. I don't know if they were profitable before, but they are profitable now. Their price to earnings is 118, which means they are very expensive. Let's go ahead and run the numbers here with my calculation before we do anything else. So they have income of 2 million, so 2.9 million. I'm going to do everything shorthand here because everything's in millions. They have sales of 344.12 million. We're going to go down and look at the cash and the debt. They have 37 million in cash, so plus 37.89. Total debt of 556. That blows us out of the water. So this is not a stock I would press on with. It just does not fit my investment profile, but we'll continue on and looking at this one. Total assets is 684 million. Total liabilities 635 million. Dangerous because let's do the quarterly really quick. 621 now. Okay, so it's dangerous because if they have a period where they don't make as much money, big events come into town and pull customers away from the business for an extended period of time. Those are concerns. We do see directors adding a little bit here, but I think when I see directors and insiders purchasing pretty small amounts in the grand scheme of things, I think it's more for vanity metrics to say, oh, there's insiders buying. But they bought this last year, it looks like. So we'll continue on and look at the stock here. So in those situations, I typically just keep out the cash and the debt, although they are very important. So we'll do a simplified version here. So we'll do 2.9 plus 344.12. And there are divided 37 million, 0.3 shares available. So this is a $9.30 stock, but you have to keep in mind the debt. That's what I always like to keep in mind. At $9.30, it gives it just a little bit of room to the upside, about 20 cents. So I don't know about this one. What was I just looking at that caught my eye? Oh yeah, the EPS actually looks like it's getting better. They're going in the right direction here. Sales overall going in the right direction. We had a big fall off in 2020 due to shares outstanding. We can see they are adding some more shares to the pool, but not too much. So not a big concern there. Their debt is a little scary, but you can see with the quick ratio right here of 2.3, if they had to close business tomorrow, they could service all of their debts and loans. So that's a good thing. But again, this is not my typical target investment. So institutions, hedge funds, the big money owns 78% as of old data. New data, I call it new data because it's more up to date. The data comes in every day. 97% ownership. That is up almost 20%. And we can see the climb right here going nice and ramping up. So AGS momentum looks hot. Vanguard added 2 million shares just a couple weeks ago. BlackRock added a bunch of shares, looks like end of January. And then ArrowMark and Millennium offsets. There's a little bit buying and selling there. So overall, momentum-wise, I think it may have momentum, but I don't like their debt situation. Let's look at AGS here for a little bit of a more refined picture. So I had charted this one out before. Let's go ahead and see 32.8. We'll do there, and then 70. It's like 70 cents was the actual all-time low. And you can see it respected the candles. It came down and tested support, tested resistance, and then just melted all the way through the bottom. And then resistance, resistance, support, support, resistance, support, resistance, and then it finally came out of the Fibonacci arc. So yeah, I think this one's okay. Again, not my cup of tea with all that debt. But you can see Vanguard, the big kahuna, purchasing quite a bit. So that's some indicator there. So on the bullish side, I think we could hit $11 if it continues to go up in this freaking crazy upward trajectory here. And then it puts us into this bearish ascending triangle. So this little wedge I'm coloring in right here is a bearish pattern usually, unless the candle and the stock price can overtake this line of resistance. So we'll typically see it fill in this wedge and then maybe come back down and test support. So whether this one goes up or down on earnings, I think it would be okay to wait for us around $6-7. So that's my opinion. Let's go back, and now we're going to look at Full House Resorts. This is another gambling resort casino. Okay, so the stock went as low as 20 or around 40 cents and as high as $12. And we are on the monthly. Okay, so this relative strength index is kind of coming back to life. Momentum is turning around to the upside, it looks like, possibly. Money flow looks like it's going straight down though right here. Relative momentum looks like it's curling back up. They are not profitable. Not good. Their EPS is kind of all over the place. No real clear signal there. Their sales are just hovering around 163 million, kind of flat. They have diluted some shares since 2020. Looks like they added 7 million shares to the pool. I want to see what insiders are doing. Nothing too crazy, honestly. Light buying and selling overall. Okay, let's run our calculation like we normally do. Actually, we have to do this first. So they make 217.11 million, but they lose 19.4. All right, let's check out their cash. They have 56,590,000. Total debt of 408 minus, yep. So this one's again a no-go. Total assets 595 million. Total liabilities 495 million. That's actually a $100 million buffer there. I kind of like that. Let's see if we have any updated quarterly here. Not really. So we're going to have to do the shorthand one here, but they are not profitable. So just keep that in mind, everybody. So they make 217.11, but they lose 19.4. And they have divided by 32.47. So this should be around a $6 stock, and it is trading at 535. So about 65-70 cent gain. It's about a 10% move. I don't know. It's not profitable, and they have a ton of debt. But again, if they had to close their doors tomorrow, they would be able to pay off any debts and loans. So I have mixed feelings about this one. Let's see what institutions are doing. Old data shows that institutions own 37%. New data says 46, so about a 10% increase there. We got Vanguard again buying 1.8 million shares. They bought Full House and AGS a couple weeks ago. How funny. BlackRock barely increased, and Portolan Capital sold quite a bit. So a little bit of mixed messages on these stocks. Let's go ahead and chart out Full House really quick. Oh wow, I've charted this one before. Okay, so let's go ahead and see. Let's activate this. Okay, so diving in, I think we're getting a lot of resistance at 555 and 595. I would see those being tested first. So I would say 595 as the near-term target. Let's see. $5.95, so 550, 586, 641, and 704 as the near-term resistances. And then the near-term supports would be 425, 405, and then anything below that is pretty much a free fall, which it could happen. So let's just okay. So what I do see here is a kind of a head and shoulders falling pattern. So left shoulder, head, right shoulder, boom. So I would say I would wait for this one. I would wait for around 295, honestly. I'd want to see it come and touch this neckline before it does anything else. Oops. So it's right in the craziness threshold. So I would wait at least a few months for this one, honestly. Wait a few months. I think we could get it at $2 or $3 while the company becomes a little bit more disciplined on their balance sheet. But you can see let's do this. So 1994 I had an all-time high, and then the new all-time high was 2021. So right here, if history tends to repeat itself, we could see, and you guys can see everything, right? So the first spike was here, spike, spike. So again, I think you got time to wait. And again, the all-time high was 899 back in 94, then 1257, and then the new all-time high would be 1504. So I think there's better fish in the sea on, to be honest. But let's see what happens around $2, and if it gets down to $2.95. So just my opinion. It could do a sharp reversal, and then this could be a cup and handle. So we have our left cup, left side of the cup, right side of the cup. This handle is being built right here. Let me make it a little bit easier. So left side of the cup, right side of the cup, handles coming up. So we would want to see, if it did play a cup and handle, it would be between 9 and 12. That is a $3 difference. So it'd be about $10.50 as our high, cup of the high, if we take the average of both these highs. So $10.50, and then the low is 25 cents. So $10.50 plus 12.57 would be around a $23 stock. If this is a true cup and handle, it kind of looks like it at the moment. We have our rounded bottom here, high, throwback from the handle, and then on and up. Totally could be way off though. I think given that they're not profitable and they could be a little bit more disciplined, I think we're okay to wait on this one. So those are my thoughts on AGS and Full House. If you own these, good luck. If you don't, tell me what you think of my video. Or if you do own these and you think I'm crazy, let me know. Hope you're doing well. Consider hitting the like and subscribe if you made it this far. Have a great day.